During 2015, a business paid $36,000 to its insurance agency to cover the insurance of the firm's property and stock during 2016, 17 and 18. So we paid $36,000 in 2015 to actually provide insurance for the next 3 years, so the business would be covered if there's any damage or fire or anything like that. With reference to the elements of accounting, explain how the $36,000 should be treated in the firm's books at the end of 2015. So when we see the elements of accounting, what we mean is it an asset, a liability, an owner's equity, a revenue, or an expense? Insurance provides the firm with economic benefits in the future. So what does that mean? It means that if we pay for insurance in 2015 and it covers us for the next 3 years, the business is covered at any point for any sort of damage. That's an economic benefit. And at the end of 2015, we haven't used any of that benefit what we're saying is all those economic benefits will be in the future. What would then happen is after 1 year goes by, we would have consumed or used $12,000 or 1/3 of those economic benefits, and that would leave the final 2 years of economic benefits unused. As we go through to the end of 2017, we'd have used up another year's worth, leaving just $12,000 unused at the end. And finally, by the time this policy is over at the end of 2018, all of those economic benefits from the insurance are over. How should the insurance be treated at the end of 2015? That is the question we've been asked. So at the end of 2015, what we've got is all the economic benefits of this insurance haven't been used. They will all be used in the future. So what does that mean? It means that the insurance will provide economic benefits, but not until the future, and they've all been unused. So that is actually going to be an asset. So we need to remember the 3 parts to the definition of an asset to answer this question. So the first part of an asset is it must be a resource controlled by the entity. It's got to be something we legally own and control. We can't have borrowed it. We can't have just picked it up. It's got to actually have been controlled by our business. Secondly, there's got to have been some sort of past event or transaction to have occurred, that's how we obtained it. And lastly, there's got to be some sort of future economic benefit flowing to the entity. So let's look at the insurance and apply that logic to the definition of an asset. So the first thing is there a past event or transaction? There is. That's in 2015 when we paid $36,000. So that is actually the definition of a past event or transaction. Secondly, is there a resource controlled by the entity? Or what that means is, yes, we legally are entitled to insurance now for the next 3 years. The insurance company can't reject us on that. They have to cover us for our insurance policy. We have a legal entitlement that we can control, so that definition is also met. And lastly, will there be an economic benefit in the future? There will be. The business is covered for insurance in the next 3 years, and all of those economic benefits are in the future. So that will be our last part of the definition. How to formulate an answer. With reference to the elements of accounting, explain how the $36,000 should be treated in the firm's books at the end of 2015. So we're going to identify that it will be an asset. So that's our first mark. Secondly, we're going to define and relate each of the parts of an asset. We're going to relate that to the example of the insurance. So the first part is there is a resource controlled by the business. That's our definition. Now we'll relate it. In this case, we have a legal claim to insurance coverage for the next 3 years. Secondly, the definition of an asset is there must be a past event. Now we'll relate that and say in this case, we paid $36,000 to the insurance company. So that is the relate part. And lastly, the definition says it must result in a future inflow of economic benefits. So now we'll relate that to this particular example. That will be in the form of insurance coverage for the next 3 years. So we've got a 4-mark question. What have we done? We've done 4 things. First of all, we've identified that the $36,000 should be an asset. Then we've gone through the definition of an asset, the 3 parts, and for each one, we've defined and related it to the case study in question. So we've got a total of 4 marks overall.